Okay, hello everyone, guys. Hello everyone. Good evening. How are you all? Good evening, everyone. Good evening, guys. Just please comment once about the audio and video of the class. Is everything is working good, working fine for all of you? Yes or no, everyone? Hi, guys. Good evening. Audio is good, video is good, no issues. Hi, Irfan. Hi, Ruchi. Hi, Gopal. Hi, Kavita. Hi, Hema. Hello. Audio is clear, video is clear, everyone. Just please comment once. Everything is clear. Thank you so much for confirming, everyone. Just please, at least whoever is watching this video, just please like the video. Okay, just please, everyone, just like the video and share it to your friend, everyone. Done. Okay, so let's start discussing. Okay, so today we are going to discuss Module B, right? Complete Macmillan books question Module B of IE IFS. This I'm going to cover in today's session. So let's start discussing. The very first question is Adam Smith defined economics as study of welfare, study of wealth, study of means and end, or none of these. Everyone, please answer this question. Adam Smith defined economics as a dash study of welfare, wealth, means, and end, or none of the above. Everyone, please answer this question. Okay, so Navdeep is saying B, Ruchis is saying B, Irfan is also saying B, and everyone else. Gopal is also saying B. Right. So the correct answer is yes, B is the correct answer. Oh, Adam Smith always defined economics as the study of wealth. The very famous book of Adam Smith was The Wealth of Nation. Okay. In this book, Adam Smith defined economics as what? A study of wealth. Adam Smith is also known as the father of economics. Adam Smith is also known as what? Father of economics. Clear? Okay. Wealth of Nation. This book was published in 1776. Everyone. Right? Good. Next question. Macroeconomics deals with dash gross domestic product, price indices, unemployment rate, or all of the above. Macroeconomics deals with what? Everyone, please answer this question. So, macroeconomics. So, you all know that economics, if we talk about the economics, economics is divided into two categories, microeconomics and macroeconomics, right? So, economics is broadly divided into two parts, micro and macroeconomics, right? Microeconomics, it deals with the individual unit. When we are talking about individual demand, individual supply, individual income, individual, then it is micro. When we are talking about nation as a whole, when we are talking about nation as a whole, then it is known as what? It is known as macroeconomics, right? So GDP, when we are talking about GDP, it is nation as a whole. Price indices, again nation as a whole. Unemployment rate, again nation as a whole. So all of the above is the correct answer. Here all of the above is the correct answer here. Okay, everyone, yes, answer. Irfan, Ruchi, Hema, Navdeep, everyone is correct here. Yes, so the correct answer is all of the above. Why all of the above? Because if we talk about the GDP, if we talk about price indices, if we talk about unemployment rate, these all are concerned with the nation as a done. Good. So good. Everyone. Now, next question is what? See, who is considered as the father of modern economics? Okay, so who is considered as the founder of the field of modern economics? Lionel Robbins, Adam Smith, Amrita Sen, or Alfred Marshall? Everyone, please answer this question. Father of modern economics. Who is considered as the father of modern economics? Everyone, please answer this question. Yes. Okay, so everyone is correct here. Yes, Adam Smith is the correct answer. These are actually the one word question related to your basics of economics, right? So when we are talking about module B, module B is very conceptual module, right? So here you will get most of the questions from demand and supply and these type of micro and macroeconomics or the budget or the national income or the theories of interest. These are all the part of module B, right? Next question. Microeconomics is concerned with the behavior of microeconomics is concerned with the behavior of GDP, economy as a whole, individual entities, or none of the above. Microeconomics is concerned with the behavior of what? Everyone of them. Hema, Navdeep, Ruchi, everyone. Just have told you that micro and macro. The economics is broadly divided into microeconomics and macroeconomics. So when we are talking about the microeconomics, GDP is actually what? GDP is actually macroeconomics because it is dealing with nation as a whole. Economy as a whole, it is the definition of macroeconomics, right? Individual entities, it is microeconomics. See, all of you is correct. Microeconomics is individual entities. So the correct answer is C. Because microeconomics, when we are talking about microeconomics, it is dealing with individual entities or individual demand or individual supply or individual income, right? So these are the microeconomics topic. Done, everyone? Good. Next, ends refers to what? Okay. So economics is basically what? Economics is the study of scarcity, you can say, or your needs and wants and your ends. So scarcity and ends. It is actually the study of what? It is actually the study of the scarcity or the limited resources and what you are or what you have the ends. Ends means what? Your needs and what. So when we are talking about economics, economics means that when we are dividing or allocating our limited resources of an economy in such a way that it can fulfill our needs and wants. Okay, that wants word is actually replaced by the ends. Ends means in the end we want to satisfy our needs, and for the satisfaction of our needs we have to allocate the scarce resources. So scarcity and ends, it is the relationship between these two economics. And ends is what? Ends is the wants, not resources. So actually end is known as the wants. What basically is the main objective of economics? To satisfy your wants. Wants is the end, right? The scarcity of the resources, the relationship between the scarcity of the resources and ends is called as the economics, and ends is called as needs and wants. Clear? Done. So D is the correct answer. Okay. Yes, everyone. D is the correct answer. Everyone, at least just like the video. Whoever is watching this session, guys, please like the video. Okay. Next question. Laissez-faire economy is dash. Laissez-faire. The extreme case of market economy, the extreme case of command economy, the extreme case of mixed economy, or none of the above. Laissez-faire is actually what? Everyone, please answer this question. Laissez-faire is actually what? Laissez-faire. So laissez-faire, first of all, this word, it is actually a French word. Laissez-faire, it is actually a French word. And laissez-faire means non-interference. In English, it is known as non-interference. And when we are talking about this term, non-interference, it is used for those economies in which the government interference is very less or nil. Okay, all those economies where government interference is very less, or you can say nil. And that economy is called as capitalist economy. That economy is called as what? Capitalist economy. Okay, and when we are talking about the capitalist economy is actually the market economy. Okay, so laissez-faire is the extreme case of market economy, which is the capitalist economy. Okay, the extreme case of command economy, no, it is socialist economy. So laissez-faire is not associated with socialist economy. Socialist is also called as centrally planned economy. Okay, mixed economy like India, where there is no domination, neither the government nor the private sector is dominating the economy, both are together managing the economy, then it is known as mixed economy, right? So if we talk about the laissez-faire concept, it is related with the market economy. Non-interference is the meaning of the laissez-faire. Okay, it is used for capitalist economy. Remember all these words. Okay, no, not mixed economy. It is the market economy. A is the correct answer. Okay, everyone. So you must have to listen this carefully. Even if you are not answering it right, you have to listen it carefully because I am just teaching you all the terms related to that. When the chapters come in the class, right? Or when you are just studying in your paid classes, so you can relate your mind with these questions. When laissez-faire economy, when I was teaching about, I will be teaching about laissez-faire economy in the class, you can relate that, okay, this type of question can be asked from this particular paragraph, right? Okay, next question. A market economy is what? In which the individual and private firm make the major decisions about production and consumptions, right? In which the government makes all the important decisions about the production and distribution, both one and two, or neither one or not two. Just now I have explained this. Just now I have explained this. Market economy is the one which is dash. I have explained it. Now you can all answer this question. Very easy. Okay, Harshal is saying A. Very good. Yes, so market economy means laissez-faire. Just now I have explained this, that it is used for the economy where the government interference is very less. When the government interference is very less, automatically individual and private sectors dominate the economy. So all those economy where individual and private firms, they are taking the major decisions about the production and consumption, that economy is called as the market economy, or you can also say as the capitalist economy, or the word laissez-faire is associated with these economy. Clear? Done? Done, everyone? Good. Good, guys. Next question. See, next question is what? India is a capitalist economy, socialist economy, laissez-faire economy, or mixed economy? Everyone, you can all answer this question. India. India is a Navdeep, Hema, Irfan, Manas, and Harshal. Everyone, Indian economy is a, obviously our Indian economy is a mixed economy where there is no domination. No domination, I mean to say, there is no domination of either the private sector nor the government. The government makes rule, private sector follow the rule. When there is no domination, then it is known as mixed economy. So D is the correct answer. India is a mixed economy. Okay, next. Demand schedule is the dash. Okay, so what is demand schedule? It is the relationship between demand and quantity bought. It is the relationship between price and quantity bought. Is the relationship between income and demand, or none of the above? Demand schedule. I'm just giving you the hint. Law of demand. In law of demand, we have the demand schedule from which we are deriving the demand curve. So law of demand basically explains you the relationship between what and what. Now answer this question. Law of demand actually give you the relationship between what and what. Yes, obviously. So if we talk about the correct answer, so the correct answer is price and quantity bought, right? So When we are talking about law of demand, first of all, the law of demand is given by Alfred Marshall. Which economist has actually explained law of demand? Law of demand is explained by Alfred Marshall. It shows the relationship between price and quantity demanded. And what is the relationship? Inverse relationship means as the price rises, the quantity demand for that product decrease and vice versa. That is known as demand schedule and that is known as law of demand. Clear? Done, everyone? Not income and demand. No, it is between price and quantity bought. Quantity bought, or you can say demand. Both can be correct. Okay. Done. Next, market demand curve obeys law of downward sloping demand, law of upward sloping demand, law of diminishing, or none of the above. Everyone, please answer this question. Very easy. Market demand curve obeys the market demand curve obeys what? So I am saying that when we are talking about the demand means law of demand means they have inverse relationship between price and demand. They have inverse relationship between price and demand, right? So as price rises, quantity demand decreases and vice versa. That is the market demand. And the curve in law of demand is always downward sloping. Remember, law of demand curve always is a downward sloping demand curve because it represents the inverse relationship between price and demand, right? So market demand curve, it always follows the downward sloping demand. So A is the correct answer. A is the correct answer, right? No, law of diminishing is completely different. Okay. Law of diminishing is different. Here we are talking about downward sloping demand, right? Everyone, you guys, whoever is watching this session, kindly just like the video. Everyone, right? Okay, next. Shifts in the supply means. Now, this is a very important topic for all of you. Shifting and movements in the demand and supply curve. Now, shift in the supply means when the changes in factors other than goods own price affect the quantity supplied. When changes in goods own price affect the quantity supplied. Both 1 in 2 or neither 1 nor 2. Okay, now see, when we are talking about these supply curve, so there is low. Everyone just please listen carefully. So there are two diagrams I am just explaining here. See this. So law of supply curve is always upward sloping, first of all. Law of supply curve is always upward sloping. Now, in a law of supply curve, first there is the rightward and leftward movements in the supply curve. So when supply curves actually shift rightward or move leftward, when it move rightward or when it move leftward, okay, then these movements, rightward and leftward movements, are because the if we talk about the movements are always because other factors are what? Other factors are affecting the supply. Okay. Whereas your price remain constant means price has no effect. Price have no effect, whereas the supply has the effect of different factors, like for example due to income supply changes, due to substitute product supply changes, technological changes, supply changes, right? Due to other factors, when the supply changes and the price remain constant, price is not moving neither up or not down, then there is a movement, or you can say shifting, either rightward shifting or leftward shifting, right? But when there is no movement in the demand curve, the demand curve either shift upwards okay, or they ship downwards. Means here, always remember when there is a shifting, okay, just a second. Shifting, the word is extension and contraction is used. Movements, just a second, give me 1 minute, everyone. Just a second, everyone, you guys, give me 1 minute. I'm just coming up. Just a second, give me 1 minute. Because movement and shifting, these are the two words, right? Just I want to see that for movement and shift, right? Okay, done. So, movements is used for what movements? Oh, okay, movement is this, shift is this. Okay, so movements actually used for this. And shift word is actually used for this, right? So this is true. I am also confused here, so always remember it clearly. First of all, if we talk about movement, in movement the supply is curve is not going either rightward or leftward. It is just moving either or down, okay? When the movement is concerned, means upward movement or downward movement, the supply curve is same. Either the supply curve is moving up or down. It is only when the price has the effect over the supply and other factors remain constant. So when price is affecting the supply, while other factors remain constant, so the supply curve either shift upward or move downwards. Okay, but when there is a shifting, okay, so shifting means rightward shift or leftward shift, and rightward and leftward shift is always when price is constant. When price is constant and other factors is affecting the supply. Okay, so this is called as shifting and this is called as movement. Movements when price has the effect over the supply, and shifting when other factors is affecting the supply while price remain constant. Okay, so always remember movement is used for up and down, shifting is used for rightward and leftward shift. Okay, I actually confused myself. I was thinking that shifting is upward and downward, but no, movement word is used for upward and downward, shifting is used for rightward and leftward. Okay, and here the word shifts is used. So shift is used when other factors are affecting the supply and price remain constant. So A is the correct answer. So the changes in factors other than goods own price affecting the quantity supply, then there is either rightward shift in the supply curve or leftward shift in the supply curve, right? And when there is the changes in the goods own price, goods own price means this, then the price or the supply either move upward or it move downward. Clear? Okay, done everyone. So in this I will be explaining in detail in the plate class, so don't worry for that. Okay, everyone, clear till now? Harshal, Hema, Navdeep, Manas, Sanjay, everyone. Okay, so shift is rightward and leftward, movements is up and down. Movements means price is affecting the supply, other factors is constant. Shifts means other factor is affecting the supply, price remain constant. Okay, done. Next question. See, equilibrium price is also known as what? Equilibrium price, market price, optimum price, market clearing price, or the real price? Everyone, please answer this question. Everyone, please answer this question. Equilibrium price, where demand is actually equal to supply. So when demand is equal to supply, when buyer is satisfied with the seller, or when law of demand is satisfied with law of supply, or you can say when demand curve intersects the supply curve. Okay, so law of demand curve is downward sloping. This is law of demand, right? And law of supply curve is upward sloping. This is law of supply. When law of demand and law of supply curve intersect, there is a point which is known as the price equilibrium. This point is known as price equilibrium, where buyer is satisfied with the seller, where supply is also equal to demand. And this is also known as market clearing price. This is also known as what? Market clearing price, everyone. Okay, so C is the correct answer. Even if you are not answering the question, don't feel sad, because you are just taking the idea. When you are going through the paid classes or when you are reading your books and notes, you will find all in the notes. Okay, so don't worry that. Okay, everyone, done? Okay, next question. The downward sloping demand curve relates quantity demand to what? Now it is easy. Downward sloping demand curve relates quantity demand to supply, income, price, or demand. Now it is easy. Now you can all answer this question, everyone. Downward sloping demand curve. Demand curve means the relationship between quantity demand and everyone. I want answer. Yes, price. So it is the relationship between price and quantity demand. What is the relationship? Inverse relationship. And it is represented by a downward sloping demand curve. It is represented by a downward sloping demand curve. Clear? Everyone? Okay. Next question. Forces behind the supply. Cost of production. What are the forces which are affecting the supply curve? Means what are the factors which are affecting the supply of the economy? Cost of production, technological advancement, government policies, or all of the above. So when I was talking about the movements and the shiftings, so in shifting I said that the price will constant while other factors affect the supply. Now what are the other factors which are affecting the supply? So yes, there are different cost of production which are affecting the supply. There are different technological advancements which are affecting the supply. There are government policies which are affecting the supply. So obviously all of the above is the correct answer. Okay, so all of the above. When all other factors are affecting the supply while price remain constant, means price has no effect over the supply, then the supply curve will either shift leftward or it shift uh, leftward or rightward. Okay, done. Done, everyone. Good. Next, consumer price index measure prices at wholesale level, producer level, retail level, or consumer level. Very easy. So there are two ways, in fact, three ways for calculating inflation: wholesale price index, consumer price index, and GDP deflator. In wholesale price index, wholesale prices are used. Consumer price index, retail level are used. Whereas the GDP deflator, we are calculating inflation based on the GDP. So the correct answer for this question is C, retail level. C is the correct answer, right? Retail level is the correct answer. Done, everyone? Sorry. Okay, next question. Money supply refers to what? Now, money supply. What is money supply? The amount of money in the bank, the amount of money with the people, the amount of money in circulation of an economy, or none of the above. Money supply refers to what? Everyone. Money supply. What is money supply? Money supply, also known as liquidity. Money supply, also known as what? Liquidity. And money supply means whatever the amount of money which is present or circulated in the economy. It is the amount of money which is actually in circulation in economy. That is known as money supply. So C is the correct answer. Yes, C is the correct answer. Right, everyone? Ruchi, Navdeep, Sanjay, Irfan, Manas, Hema, Harshad, everyone. Right? So C is the correct answer. Next question. Price index used in India to calculate inflation for policy formulation is. So from which method India is calculating inflation? Consumer price index, GDP deflator, wholesale price index, or the retail price index? So the correct answer is for policy formulation, which of the following price index is used in India? For policy formulation. So there are two things. There are two things you have to remember this. First, for general use, for general references, okay, what we are seeing in the newspaper, what we are seeing in everyday's news channel, that India's inflation is this, India's inflation is this, that was CPI, consumer price index, that was CPI. But when we are talking about policy formulation, the price index which is used to calculate the policy formulation, it is the wholesale price index, WPI. So for policy formulation, it is wholesale price index. But for general use, or the main method for which the calculation of inflation is done in India, it was CPI, consumer price index. Okay, so these are the two things. Done, everyone? Everyone, guys, done? At least everyone, just please like the video. Whoever is watching this video, please like the video. Done. Next, which of the following statements is true about inflation? Which of the following statement is true about inflation? First, rise in the general price level or leads to the fall in purchasing power, both A and B, or neither A nor B, or none of the above. Okay, so which statement is true about inflation? Everyone, please answer this question. Which statement is true about inflation? So inflation is what? First of all, the general rise in the prices of goods, which leads to the fall in purchasing power. Because obviously, when your prices of the product rises in the economy, your purchasing power will actually falls, and that's why that is known as inflation. So both the statements are correct, so C is the correct answer. So it is the rise in the general price level plus fall in the purchasing power. So C is the correct answer, everyone. Both A and B is the correct answer. Done. Good. Next, demand deposits are paid on demand, not paid on demand, relatively less liquid than cash, and demand deposit, on both A and B. Very easy question. Demand deposits, everyone. So this you have already learned in PPP also. This we have learned in PPP also, right? So demand deposits are paid on demand, not paid on demand, relatively less liquid than cash, and demand deposits on both A and B. Obviously, demand deposits are paid on demand. Okay, nothing complicated here. Yes, so A is the correct answer. Next question. Time deposits. Now, the same options, but you have to answer time deposits. The same options, you have to answer the time deposits. Everyone. Time deposits. Okay. So, time deposits. Huh. First of all, time deposits are not paid on demand. Okay. First of all, no. It is not paid on demand. Yes, it can be the answer. Relatively less liquid than cash and demand deposit. It is also correct. So both B and C is the correct answer. Obviously, when time deposits are concerned, like FDs are less liquid than your saving deposit, because in saving deposit you can withdraw cash whenever you want. But in time deposit, you have certain maturity time period. So it is obviously less liquid than cash and demand deposit, plus it is not paid on demand. So B and C both are the correct answer. So D is the correct answer here. So D is the correct answer here. Done, everyone? Okay, next question. Pick the odd one out. Pick the odd one out. Rent, wages, interest, or money. Odd one out. Pick the odd one out, everyone. Odd one out. So you just use your mind and answer this question. Rent, wages, interest, and money. Odd one out. Sanjay is right, Karthik is right, Ifan is right, everyone is right. Very good. See, rent and wages and interest, these are all the form of earnings. Okay. Rent is a form of earning, wages is a form of earning, interest is a form of earning, money is simply cash. Okay, and that's why D is odd one out here. So D is the correct answer. Done. D is the correct answer. Yes, D is the correct answer. Okay. Next question. According to GM Keynes, rate of interest and bond price are related inversely, parallel, directly, or horizontal. Very easy. You must have remembered the bonds theorem. If you haven't remembered that bonds theorem, no issues. But this is a very important chapter plus a very important question for all of you. The rate of interest and bonds price are always. Yes, Irfan, it is just a starter. You will get a mixture of both easy plus tough questions in the examination. So this particular uh, session is dedicated to Macmillan books question only, and that's why you will find these questions easy, right? Because it is completely Macmillan. I haven't framed any questions for you, okay? But when we are talking about the exams has a mixture of both, right? So when we I'm going to take another marathon of module B, then I will be framing questions and setting question for you all according to the level which is asked in the examination. Okay. Yes, so inversely proportional. Ruchi, why you are saying parallel and directly? Why? Inversely related. Rate of interest and bond price are always inversely proportional to each other. So as the market interest rate increases, bond price will decrease and vice versa. As the market interest rate increase, bond price will decrease and vice versa. Okay, inversely related. Clear? Done, everyone? Good. Now, next question. IS curve is derived from classical theory. There is Keynesian liquidity preference theory of interest, law of diminishing marginal utility, or law of equi marginal utility. IS curve, investment saving curve, is actually derived from which theory? Investment saving curve. Investment saving, IS curve. So IS curve is actually derived from the classical theory. Now this is the theories of interest chapter. Now we in this chapter in the paid class we are going to discuss everything in detail. What is the classical theory, what is the Keynesian theory, what is the law of diminishing marginal utility, what is equi marginal utility, everything, right? Because these concepts are very lengthy and that's why I'm not explaining this concept in today's MCQ session. Okay, so A is the correct answer here. Okay, classical theory. Next question. Keynes explained interest in terms of purely real force, monetary force, economic force, or social force. Everyone. Keynes explained interest purely in the form of. Everyone, please answer this question. Keynes explain interest purely in the form of. No, it is purely in the form of monetary forces. Again, theory of interest chapter. I'm not just touching this chapter in this particular MCQ session. Why? Because I know there are lot of things to explain in this chapter. So, our MCQ will not do justice to the depth of this chapter, and that's why I'm not touching this chapter. I'm not explaining the theories of interest right now because you will get confused, hell confused here, right? And that's why I'm not explaining anything here, especially in the chapter of theories of interest, right? So just skip this because you will get a complete 2 hour session for this theories of interest in the paid class. Why? Because this is very complicated plus very important chapter for all of you. Okay. Next, business cycle is also known as, now easy. Business cycle is also known as entrepreneur cycle, economic cycle, vicious cycle, or circle, or none of the above. Business cycle is also known as what? Everyone, please answer this question. Business cycle is also known as what? Everyone, please answer this question. Business cycle. Yes, business cycle is also known as what? Economic cycle. Economic cycle means the regular up and downs of the economy, right? So business cycle is also known as economic cycle. B is the correct answer, right? Next question. Again, pick the odd one out. Boom, slow down, depression or recovery. Boom, slow down, depression or recovery. Everyone please answer this question. Odd one out. Boom, slow down, depression, recovery. Odd one out here. Odd one out. So, odd one out. See, recovery, depression, and move. These are actually the business cycle, or you can say these are actually the economical conditions. We have depression, we have inflation, we have recession, we have recovery, we have boom. Slow down is not any of the name of economic cycle, and that's why B is the correct answer here. Okay, odd one out. Why slow down? Because slow down is not defined, or it's not a definition for any of the situation of the economy. We have boom phases, we have depression phase, we have recovery phase, we have recession phase, we have inflation phase, but no slowdown. Slowdown is not a phase. Okay, so that's why B is the correct answer. Okay, next question. Underemployment of both men and material is a characteristic of which phase? Underemployment of both men and material is a characteristic of which phase? Depression, recovery, boom, or recession? Everyone, please answer this question. So these are all the phases named: depression, recovery, boom, or recession. Underemployment of both men and material. What is underemployment? Means getting less than what you deserve. Like example, a software engineer is doing a role of HR because the economy is not capable of giving you the enough job opportunities, so you have to settle less for what you actually deserve, right? That is the underemployment. And when we are talking about depression, the main characteristic of the depression phase of the economy is there is an underemployment of both men and material. So depression is the correct answer. A is the correct answer. Okay, everyone. Depression is the correct answer. So underemployment of both men and material is a characteristic of which phase? So it is a characteristic of the depression. So the correct answer is what? The correct answer is depression. Everyone. Right? Okay, next question is what? Bank rate is also referred to as what? Bank rate is also referred to as what? Discount rate, subside rate, marginal rate, or none of the above. Bank rate is also called as what? Everyone, please answer this question. Bank rate is also called as what? Everyone, please answer this question. Bank rate. So, bank rate is also called as what? Everyone. Yes, bank rate is also called as discount rate. Bank rate is also called as discount rate. No, not subside rate, not marginal rate. Bank rate is also called as what? Discount rate, right? Bank rate is the rate in which the commercial Reserve Bank of India is giving long-term loan to the commercial banks, right? So that is known as bank rate. And bank rate is also called as the discount rate. So the correct answer is A. Okay, everyone. Done. Next question. FRBM enacted or FRBM Act enacted as law in which year? 2001, 4, 3 or 2? Everyone please answer this question. FRBM is Fiscal Responsibilities and Budget Management Act. Fiscal Responsibilities and Budget Management Act has been enacted in which year? 2001, 4, 3 or 2? So the correct answer for this is, everyone please answer this question. Hema, Ruchi, Harshal, Kavita, Manas and everyone. Please answer this question, right? Everyone. FRBM Act actually enacted as law in year 2004. 2004 is the correct answer. Fiscal Responsibilities and Budget Management Act passed in year 2004. So the correct answer is 2004. So the correct answer is what? 2004. Everyone. Right? Okay. So next question is what? See the next question. FRBM Act, expand the FRBM Act. So this answer I have already given you. Please answer this question, everyone. FRBM Act. FRBM Act. So the full form is what? Everyone. So, so the correct answer is what? Obviously, the Fiscal Responsibilities and Budget Management Act that I have already told you. D is the correct answer, right? Okay, next. Personal consumption expenditure of household divided into durable goods, non-durable goods, services, or all of the above. Personal consumption expenditure of household is actually divided into which category? So we are using durable goods, we are using non-durable goods, we are using services, or all of the above. So personal consumption, if I am talking about my consumption, I am using durable, non-durable, services, yeah, all of the above. You can all answer this question very easy. Everyone, and please like and share the video to the maximum you can. Everyone, please like the video, guys, please. Yes, so if we talk about the personal consumption expenditure of household, it is actually durable, non-durable, service, everything. So all of the above is the correct answer. D is the correct answer, everyone. Yes, D is the correct answer. Next question. Factors of productions are land, labor, capital, asset, machinery, money, land, labor, capital, and entrepreneur, or none of the above. Factors of productions are, everyone please answer this question. Factors of production are, factors of production are, yes, it is land, labor, capital, and entrepreneur, not A. It is C, land, labor, capital, entrepreneur. C is the correct answer. True. Next question. Market price is dash price for which a goods or services is offered in the marketplace. Market price is a nominal price, economic price, marginal price, or deficit price. You can all answer this question. Everyone. You can all answer this question. Market price is the what? Market price is the economical price, okay, at which a good is offered in the marketplace. So B is the correct answer. Market price is the price at which a product is sold in the market, right? Very easy. Next question. Which article actually replaces the word budget with the annual financial statement? So officially we are using the word annual financial statement. Which article has actually replaced the word budget with the what? With the annual financial statement? Everyone please answer this question. So it is the nominal price. I am confused with this and this, right? But it is the economical price. Just give me 1 minute. I'm just checking this. Everyone, just please, I'm checking this. I think it is an economical price. Nominal price is also can be the answer. So here I'm actually confused, right? So just question, I will give you the answer in the next class. Don't worry. Okay. Next, this which article the budget word is actually replaced by annual financial statement? Yes. So it is according to Article 112, the budget word is replaced with the annual financial statement, right? And the last question is, which of the following does not come under the revenue expenditure? Everyone, revenue expenditure. So first of all, what is the definition of revenue expenditure? Revenue expenditures are those expenditure which neither reduces the financial liability of the government nor it increases any asset. Means any those expenditure in which there is no asset gain for the government, neither there is decrease in any financial liability, then it is called as the revenue expenditure. So which of the following comes under the revenue expenditure? Doesn't comes under the revenue expenditure? Subsidies, interest payment, pension, or none of the above? So first of all, subsidies. Subsidies is neither decreasing financial liability nor increasing the asset. It is the revenue expenditure. Interest payment, neither decreasing financial liability nor increasing the asset. Why? Because interest, when you are paying interest, it is not reducing your liability. Liability is actually the principal amount, so it is also a revenue expenditure. Pension is also a revenue expenditure, so none of the above is the correct answer here. D is the correct answer here. Done. Okay, so this is it. This is the complete Macmillan questions for module D, everyone, right? So thank you so much, guys, for attending this session. I hope that you have all enjoyed this session completely. And it's a request, guys, everyone, after I end this video, just please comment your feedbacks in the comment section. This is very important. So as I end the session, you will see that now the comment box is open. I kindly request you all to give your feedbacks in the comment section. Plus, if you haven't liked this video, at least please like this video and share as much as you can. Okay. Thank you so much. Take care, everyone. Bye bye, guys. Bye, everyone. Take care. Okay. Thank you. Bye. Take care, everyone. Bye, guys. Thank you.